Good morning, everyone. Let's take a look at today's key market moves across the US dollar, crude oil, gold, and the Australian dollar. So, starting with the index, the US dollar index slipped back to around 98.2 after briefly touching 98.65 midweek. While the safe haven flows gave it some support, the expectations of a Fed rate cut in September continue to keep upside momentum. And the recent comments from Fed officials have reinforced a dovish tone. And traders are closely watching Friday's non-farm payrolls after July's disappointing job numbers. And technically, the index has found support near 98 and has managed three consecutive daily close higher. The short-term average are turning up, forming a potential golden cross, while resistance sits around 98.7 to 99. A clear break above the area could open the way for further gains, but a move below 98 risks sending it back towards last week's low near 97.5. Moving to WTI crude oil. The oil prices retreated to around $63.6 a barrel, down from a recent 4-week high. Reports that OPEC may raise output at its upcoming meeting weighed on the sentiment, while Russian seaborne and exports also picked up because Chinese demands replaced weaker Indian buying. And on the demand side, US factory data disappointed, adding to concerns about the outlook. And from a chart perspective, crude is consolidating just above its 20-day moving average near 63.3. The momentum indicators show recent gains stalling, with the market pausing below resistance around 65.7 to $66. A push above that zone could revive bullish momentum, while support remains near $63 and then 61.5. Moving to spot gold. Gold extended its rally, trading near $35.60 an ounce after hitting a record of $35.78 earlier this week. The metal has now posted six straight daily gains, supported by the expectations of a Fed rate cut, continued central bank buying, and steady safe haven demand. The ETF inflows have also picked up, helping to underpin the move. And technically, gold is firmly in an uptrend. Prices are trading above key short-term moving average, while the RSI has entered overbought territory, but still shows room before exhaustion. If momentum continues, the next upside target sits around 3600 and potentially 3650. But a pullback toward 3500 would not be surprising given the pace of the recent gains. And last but not least, the Australian dollar. The Aussie dollar held near 0.6540, consolidating after a strong GDP reading showed that the economy grew 0.6% in the second quarter, above expectations. And however, the sentiment was tempered by a firmer US dollar and caution ahead of the US labor market data. And China's service PMI also weighed, highlighting uneven growth in Australia's largest trading partner. And on the charts, Australian dollar remains above its 20-day moving average around 0.65, suggesting near-term support. The key resistance lies at last month's high near 0.6570, followed by the psychological level 0.66 level. A break below 0.65, however, could shift the momentum back towards 0.6460 and even 0.64. So to wrap up, the dollar is holding firm but capped by rate cut expectations. Oil is consolidating on supply headlines. Gold continues to shine on safe haven flows. And the Aussie is steady but vulnerable to external risk. We'll be watching the Friday's jobs report and the Fed signals closely for the next big moves. So that's your morning market outlook. Thank you for watching.